Good morning. Appears I'm late again. I apologize for that. All right, let me dispense with the formalities. Let me get my device in my ear. And let's get rid of this thing here, which in theory is supposed to be there. When I'm early, it's like 7 degrees here or something, -4 or -7 wind chill, and I had to take care of the goats, and I did a deep dive into volatility and all that kind of stuff. Well, not necessarily a deep dive, but I had to look into volatility and sort of see um, what's going on under the hood, and there's a lot going on under the hood. And so let's just get right to it. And let's start with where we are. So we're basically at yesterday's low, maybe undercut it a little bit. We've got the 50 DMA, which maybe I'm old school, right around here, which I think is important. I thought we would hold it yesterday. I was wrong. We got sucked down to the with via charm right down to that 67.95 strike that we were looking at in the room, which was a large put spread that was sold by the customers. And that positive gamma, when it's above us and we're close, charm drifts us right below it. And when it's close and it's below us at the end of the day, we get sucked right toward it. And that's what happened yesterday's close. Okay. So here's where we are. Let's take a quick look at the internals dashboard, and basically they're going to suck. Strong bear, ADD, Valdi bearish, etc., etc. No real surprise here. Does this one have the? No, I have another one with well, this one, the breadth. The breadth was 25 advances to 75 decliners, which again we kind of know it's not surprising. We're going to look at the vol space in a minute. Is anybody here? Say hi. No, I like the other view better. Okay. Well, I'm going to assume people are here. There we go. Okay. How you doing, everybody? Okay. So here we are. Looks like crap. That's a technical term. And I guess we'll go to my notes, which I just barely got out on time. I still have to send it out on WHOP. So yesterday we saw a real red day, 2% down, worst single session since October, which makes a nice headline. And VIX went kind of nutty, and we'll talk about that in a minute. So now today is VIXperation. And so how much of that was related to VIXperation and to people rolling their VIX hedges? When we get to the VVIX, I'll talk about that, the volatility, and how much of it is clearly there's near-term fear. The VIX 9-day spiked like 15% or something. We're in backwardation, the VIX 9-day versus the VIX, at least we were yesterday. And we're near a tipping point. I'm not ready to call it a tipping point yet. And I have a whole write-up on that I didn't include in here that I guess we'll do tonight in the subscriber webinar. Okay, so VIX was 20. The more important tell, like I say, the VIX 9-day moved up harder percentage-wise, and the VIX and the VVIX pushed up to 117. Okay, so this wasn't just vol up, spot down, standard. people are paying for the near-term convexity, but so the stress is front-loaded. But it's not really a full capitulation. And let me go to, I have a more detailed write-up on this. So what really happened though within the VIX, if we look at the decomposition index, was the sticky strike shifted, parallel strike shifted, kind of everything shifted. The sticky strike shift was just repricing the curve, the repricing each tenor according to the move down in the curve. Put skew did go up, call skew went up a tiny drop, downside convexity went up. So this was kind of a repricing of volatility. And that's how we break it up. But most of it was just a sticky strike shift. We went down, so I'll just pick a number. The 6,700 put was priced at 1 vol when we were at 6,900. Now at 6,800, that's got to be repriced. And so the sticky strike shift is the repricing of that. There's Vol Trader. Good morning, sir. Okay, so that's.
Hey, good morning. Good morning. Sorry, I'm late. Didn't have internet.
That's okay.
Here.
That's okay. I was late too. Okay, so there's what's a simple version, what's going on there, and I have a more complicated version that I'm going to get to tonight on the subscriber webinar, talking about the sticky strike and the parallel shift and sticky delta and all that kind of stuff. We'll get into that tonight.
Okay, I need a couple of minutes. I'll be with you. Just a second.
Okay, go ahead. I'm just kind of getting the show on the road here too. Okay, so now let's go to the volatility dashboard real quick while we're in the. Okay, so the VVIX spiked to 117. The thing that's most telling, or one of the things that's most telling, was that the VIX 9-day yesterday spiked 15%-ish, where the VIX spiked 6-7%. So it spiked more percentage-wise, which matters, and it was higher. The VIX 9-day was higher than the VIX throughout parts of the session yesterday. I'm not sure how they're going to open today. So that's near term, whatever. Near term fear hedging. What are we hedging? We're hedging Trump at Davos. We're hedging PCE Friday. We're hedging the FOMC next Friday. We're hedging apparently, and I made a little mention of this yesterday in my notes. And it turns out that I passed over it with the minimum of concern. Apparently, the whole Japan bond yield, Japan bond selling off, and the whole yen carry, Japan carry trade is a whole nother fly in the ointment, which our Secretary of the Treasury said was the real reason for the sell-off. Not sure that part of it might be to deflect away from the whole Greenland thing, but also it was a six standard deviation move in the Japan bond over 2 days. That matters. I'm not sure exactly why it matters. I mean, well, I have an idea why it matters. I'm not going to explain it to you other than the web of connectivity and there's stress under the hood. So we just have to be careful for that. So all this stuff is going on. And so that's what's going on in volatility. So now the VVIX was up percentage-wise also more than the VIX, which is just a bid for vol. So this is not, so the VIX is the SPX options pricing. And the VVIX, volatility is the pricing of VIX options. Now, I don't know how much of that is, how should I say it, is studied. We think vol will be at this level in this time frame, whatever, it's worth paying this. And how much of it is simply a VIXpiration roll. Okay, our VIX 20 calls are expiring tomorrow. And so our risk management says we have this, we have that, and just kind of rolling and being somewhat price insensitive. I don't know. We'll find out. So that's what went on here. Another thing, let me just find this. So the VIX ratio, this needs to be recalculated. This is wrong. When I calculated the ratio, it was up near here. But even let's just say that this is right. We're kind of near a level where we kind of start bottoming out. I'm not ready to say the bottom is here quite yet. And during the November sell-off, it went much lower. During the December low, 67.20, an important number, according to the OG McMillan, who I've been following for a quarter century. Apparently, that's a tell for the first quarter if this low holds or breaks. And that was 67.20-ish. So that's a number that I have marked on my mental chart. And so are we at the bottom? I don't know. I'm not ready to call the bottom. I'd like to see the 50-day retaken. Like to see vol come in a little bit. Another classic McMillan signal is VIX down, closed 3 points below a local high. The local high yesterday was 20.5. So we want to see a VIX close below 17.5. So mark that on your mental calendar as well, 17.5. Another thing, I guess, while we're in the minutiae space, let's talk real quickly about the put-call ratio. Do I have it here? Okay, good enough. Whoops, switch to daily. Okay, switch to daily. Yes, sir. All right, that looks like crap. Let's make it align so we can see it. Okay, put-call ratio. McMillan signal put-call ratio of 0.9. That's kind of also where the put-call ratio is a little too high. Now, he likes to see the 21-day moving average. I don't have a 21-day, but I have a 20-day. Is this my 20-day? Let's see. That's my 50-day. No, he doesn't care about the 50-day. He cares about the 20-day. Let's find the 20-day moving average.
I'm here. I'm ready.
Okay, so it's above its 20-day moving average. So it's kind of, the put-call ratio is kind of at an extreme. So everything is at an extreme, but we're not ready to say, to pull the contrarian trigger yet. However, his system says that when this triggers, we have about a 100-point move in the SPX over the next 14 to 30 days, whatever. You go along like a 100-wide butterfly or something like that. I'll signal to, when I'm doing it, you can do what you want. Okay, let's get back to the church of what's happening now, rather than, I'm not ready to call that yet. Well, it might be today. You never know. You never know, like they say. Okay. So here's where we are right down here. Now let's shift to, what are we shifting to? We're going to shift gears to the options depth profile. We're going to kind of go back and forth a little bit. And when I see this, what I call a fishbone pattern or a spine pattern, or as my former mentor liked to call it, or a frog in a blender pattern, red, green, red, green, red, green. That's really noise shop. Don't torture the data. Where you're in for a choppy day where there's not much predictability based on my system. Maybe you have a system that will give you clean lines. This doesn't give me clean lines. It gives me crazy choppy zones. So let's look at where the crazy choppy zones are, shall we? So we have one crazy choppy zone, which I'm going to call the chop zone, 6760 to 60, what is this? To 6,800 round number. And right near where we close with a negative gamma ladder, accelerate this way, accelerate up towards 6805, 10, whatever, accelerate down toward 67, 65, maybe undercut. The biggest strike on the board here, well, there's a few big negative gamma strikes pulling down, 6750 round number, 6785 where we closed. We're going to open right on that, and 6805 a little above us. So we have this area is a mess, and this is long calls though. This is customer long calls. People bought the 6800. And people bought, what is this, a 6785 put. So we have a bull bear fight right there. Some people have the at the money puts, some people have the slightly out of money calls, around 2,000 each. Maybe it's the same people. I don't know. Doesn't really matter who owns them. And then we have 6755, another bunch of customer long puts. Down here below 6755 below here, we've got 6740 and lower, 6715. We've got some puts sold, so we can maybe say that support above us here. If we can get over 6,800, which is, not crazy considering the move yesterday, we kind of have a ladder up from 6,800, 6,815, kind of up to 6,875 with a few stopping points at 6,830, the 50-day moving average, 6,850-ish round number, and over here at 6,885 and higher, which was, I think, near where we opened yesterday. Kind of a bridge too far, but it's all choppy. It's all choppy, sloppy. Going to be headline driven. Depends how the VIXperation goes and where VIX settles. So there's just a lot going on here. There's just a lot going on here.
Does the VIX release? It expires at the open, right? Something like that.
Right. So it tends to unclench, and it seems like it's clenched in those calls, and so
at the 20,
I would expect a VIX to pull back at least initially, and then we need to see where things clear out.
Okay.
When we're call dominated, when we're clenched in that negative gamma on the call side, and it releases, that tends to let us go down. How far down? Where we go? Where we reprice? Vol got repriced yesterday. VVIX was bid up. So I think most of this was done. I think most of the hedging for the further dated VIX calls and all that was done yesterday when they came in. So there may be a little bit more coming in today. So I think the volatility space, as always, is going to give us a tell, vol trader, with your name. And so, I'm curious to hear what you have to say once I get through all this stuff. So here's what we got here, and it's a mess. I'm not gonna blow smoke up your ass, as they say in France. So overnight, the future tried to bounce. We were up like 20-ish points when I checked, when I was putting the, just making sure the goats were locked up and everything. It was like below zero last night. Then we were up around 15 early in the morning when I started deep diving into the VIX, into the vol space. And then at 7, when I started writing this, we were around flat. We're still flat-ish now. We have VIXperation, we have Trump at Davos. Okay, enough narrative. Let's get to the lines. Okay. So what do we got going on? We have Davos headlines. We have housing data. Some came in. I think that should have come in already. 8:30. We have more construction spending and home sales. So economy read through kind of stuff. We have now earnings season is starting, so we have earnings read throughs. We have J&J, Schwab, IBKR reported last night. They were down. Travelers Insurance. We have some more stuff coming in. Trucking, Kinder Morgan, pipelines. So we got all kinds of stuff coming in for the read-throughs. I'm not the one that's I don't have the time here to go through each one and set the read-throughs, whatever. I'm sure most of you can do that yourself. I might do some of it in the room if we have some ideas. Okay, so reference 67.85. That was kind of where we were pre-market. So the expected move when I took it was around 50 points. So 67.40, or it was 45 points, whatever it was. So 67, it was 45. So 67.40 at the bottom of the expected move, 68.40 on the top. The 5-day range, this is just price range, 67.90, which we're kind of at now, to 69.80. Yesterday's range was almost 100 points. Almost 100 points. The 20-day moving average is above us at 69.10. And that December low that I talked about, that December low is right here at 67.20. $67.15, 60 to 67, 68.15 is the fishbone pattern I told you about. 68.20, 68.75 is that two-way ladder. And 68.90, then we just kind of, just back up to the top. Okay. And then we have the chop zone, which we kind of talked about. Volatility. Okay, let's talk about the volatility. Front end vol bid, we talked about that. VIX 9-day over VIX, percentage-wise, the VIX 117. So intraday swings, the VIX stayed sharp even on bounces. They were bidding up the VIX all day. Inside the chop box, like we said, quick reversals, failed follow-throughs, headline, all that kind of stuff. And then we have the VIXperation, et cetera, et cetera. And that's basically it. So Val, you have anything you want to share here?
Yeah. Let's
You have some charts?
yeah, let me do the screen sharing thing. 1 second.
Okay, let me get my stuff off. Hold on.
Share screen. Screen 1. Okay. Here it is. I think.
Okay, go for it.
Okay, so we are still put dominated. Less so than yesterday. Yesterday was like extreme put domination. Like I think it was 3-1, 4-1.
Yeah, it was crazy.
Yeah, something crazy like that. And today we still have that, but less so. We can see here We can see the way I do the PCR, right?
Go
It's
ahead. So you're
2.3.
looking at the put call ratio too, huh?
Well, not really, only if it's above 1 or 2.
Right,
Like
right,
it's
right,
pretty
right, right,
rare,
right, 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 right.
right?
So my point in mentioning that is a lot of people don't look at it, but old school traders, we just keep an eyeball on it. It's not something you look at every day, but when it starts to show these extremes, you start to say, what's going on? That was my point.
Yeah, we know the thresholds for the last 20 years, right? So above 2 is pretty rare, and just like you follow VIX to try and capture that, the potential peak wherever it will go, 40, 60, or whatever, when it happens, yeah, when there's a big issue going on,
Exactly,
right? So you
exactly.
have all these signal lights just before an event. These old school indicators might give you a hint that something big might happen. But if it doesn't, then it just captures a local extreme that you wouldn't otherwise be aware of. That's
Exactly.
basically it. The thing is that you monitor this for a year, and you might get 10 days out of the year that it's
Right,
above
exactly.
2.
You'll get a
So
few signals. That's it. You're
yeah,
going to get a few signals, right?
and obviously I don't give too much weight to that. It's just there, part of the analysis. Yesterday obviously was very extreme, so I was pretty curious to see how this moved. The first thing that caught my eye today actually was the fact that the day over day OCC update over the January expiration barely moved the needle,
Yep.
meaning that most of the positions are still there like they were. I did capture some put monetization yesterday around the 68, 67.90, 67.80. I'll touch base on that in a second. I think it's an important level. But other than that, uh, nothing significant in terms of new position. This means that whoever was there from last week still there,
Yep.
and other people that are not in the options are just sitting on the sidelines waiting to see what's going on. And I find that interesting because it shows that the market is not ready yet to try and buy a dip or something like that. It doesn't mean the market cannot reverse, but the general appetite that was there all the time, especially the last 2 weeks, is not there, and people are just on the sidelines waiting for some clearance over all the news. And every day you might have something new, right? So people are a bit anxious around that, but not anxious enough to spike the VIX to a real extreme. I was expecting from last week into this week, I was expecting 68,000 print on the SPX with a spike up to 20. I was positions around those levels, um, and as of now, there's no real appetite or panic, towards excessive selling. It's more like reacting to these headlines that people just want to be cautious. That's how I see it right
And
now.
that's consistent with the VIX decomposition index. Everything shifted with price. Yeah, there was a bid for vol, but there wasn't really a reach for downside protection. Everybody kind of held their positions, so everything got repriced.
Yeah, considering the fact that we moved and gapped that way, the VIX did go where it should be at around
Yeah,
20,
exactly,
but the
exactly. Didn't do
slope
anything
the
crazy,
slope of
right?
the skew, when you're looking at the January skew, the slope didn't change much. So it did rise, of course, because you didn't have 20 all the way down 5% last week. Last week, if you were looking to sell a 20 vol, you needed to go 3.7, 4.2%. So starting from 69.50, you needed to go down the strikes to find something that will give you a 20 vol. Eventually, the market went down almost 2%, right? We went down 150 points, and the VIX hit already at the money 20. So the VIX did climb 3 points net over last week, but
It did
again,
exactly what the math
not
said it
such a
should
big
do.
not
Right. It
such a
did
big
exactly
deal,
what the
right?
math said it should do. I guess why I translate it for the people. It did exactly what the math said it should do.
Exactly what? Sorry.
But the math said it should do the 3 points.
Oh, okay. I wasn't. I didn't hear what you guys were talking before, but what I'm trying to say is that it's not like as of now, it's not a big event. So people are used to these dumps every once in a while. They don't get too anxious. I think that because the headlines are very extreme, then people are cautious. But you're not really seeing anything other than in the bond market. You're not really seeing any special stuff going on. So looking at my stuff, the first thing I show here is the OI surface. What we're seeing here is, we have the purple bars over here in this chart represents the puts, and the green bars represents the calls. And you can pretty much see that the purple dominate over the green, and only starting at 68.50 you start getting some call domination where the put fades and the calls shine stronger. But up till then, we're currently trading around 6800, 6810. Everything above us is a large put position, so in the money puts, which radiate over obviously resistance. And also the expectation chart, which is something that I show when I talk here, generally is tilted to the right. So it peaks, it tends to go up into the right, into the higher strikes. Today, clearly flat all over. The market is totally undecided and shifted a bit to the downside. So yeah, this is also pretty rare to see in that sense. Looking at it from a different angle, so the red dotted line is the 0DT, the green dotted line is the remaining January expiration other than today. What is interesting here is that it's relatively bearish today, the 0DT, but starting tomorrow, it's a bit more positive. Now this can change obviously if the market crashes today another 2%, but these two are generally pretty correlated, and they are not. So it's like the market is taking it day by day. He's not running out to the end of January and going crazy to the sell side, which is kind of what I said before, that people are maybe on the sidelines and they haven't really decided what to do. Are they buying the dip? Are they selling? They're just on the sidelines waiting for some type of clearance around all the noise that we're hearing. You can see
which
that
is probably not a bad idea.
Yeah, you can see that the green dotted line, which is the remaining of the January complex, goes from negative to positive around 68.45.50.
Indicating what? Explain to the folks.
Indicating the sentiment shift, right? I mean,
Okay.
where the position represents a long position, right? That starts around 68.50, and the market currently under that level is dominated by puts, by a general short position, we can call that, right? Without going into the side of trade and what the market maker and the customer, the general position of the market is short under 68.40 for sure. But we can see there's something there at the 68.05. That's obviously the in the money, that large green bar that we can see here at this level, 68.50. We can see this green bar just to the right of this big put bar. So clearly the first line in the sand is around here, 6800, 6810, right? You can see kind of a push and shove between the calls and puts here locally. Yeah, it's put dominated, of course, until 6850, but still there's this single column of calls which was opened between yesterday and today, which stands out here. And if the sellers will not be too aggressive today, pushing under 6800, and we stall here enough, then you can get some 0DT, positive charm, and an overall potential for some Vanna effect by the end of the week. So, but this depends really how the 6800 and 6805 will work, and we'll see this at the open. So this is just the open interest layout, right? We saw, and clearly we have the 6850 being the main border between bulls and bears in my eyes. So we still have some path to go up, if anything. Now, looking a bit at some vol analysis. So the blue represents my vol model, and it is actually tilted a bit. So the trough is pretty high above us, right? You can see the trough around 6880, 6900, which is kind of strange because it's not bearish, it's bullish actually. But it is there. It is there within the data. There is some tendency of doing this long at the money, short out of the money call type. Now, obviously, anybody following skew will say, well, this is a natural shape. There's always a trough a bit above spot, and the put side goes up. Yeah, I agree, but the spot is 6,800. The trough is 6,900. That is not noise. That is positioning. So there is something there. I'm cautious to say we have a reversal day or something like that. I'm not saying that, but I was pretty surprised to see this. I would expect the trough to be 6840, where the market flips from put to calls. That would be more natural, still above us 40 points, but more natural. It's stretched to the upside, which is kind of bullish, so kind of strange. Also, the way I identify significant trades against the market making quoting machines, and I elect them as trades which are volatility trades over the skew. So you can clearly see that contrary to what we saw in the open interest, where things get call dominated from 6850 and over, here we basically see that there is call positioning over the skew that starts at the spot, right? Other than this small red thing representing something from the put side, it's all call dominated, and this does support this skew. Now, why would somebody do this position? So there could be, the explanation could be this: they came short into yesterday, they closed the position, so obviously I'm not aware of how they came, and I can see only the impression they leave following the short coverage, and that would explain they were short, so they were long puts and short out the money puts, and then they reverse this position, and this is what this bend happens as they exit their position, and this might be an explanation. I agree. But on the other hand, this might also be some type of, stealth type of long position hidden within the data, and subtle enough not to be that obvious, but I'm clearly seeing it. Now, for me, the minimum for me to start thinking bullish is only above 68.25, is where this...
Yes, and that's the 50-day moving average. That's what I like too.
Okay, I'm
Yeah.
not... Obviously, I'm not aware about that, but
I'm adding the confluence. There's more than one thing going on there.
Okay, so I'm seeing it here. The way this is structured tells me that 6,800 and under, I'm only short. With a small flag, I'll talk about it in a second. And 68.25 would be the beginning of of proof that something bullish is here, and maybe the market is a bit extreme. Maybe the VIXperation, I don't know, something will generate that. But until it doesn't reclaim those levels, 68.25, I'm not even considering not even a small long position. So this AMP model tries to capture the potential move and exhaustion. So think about it like a candy wrap, right? So this area here around the 6850 is where you wrap the the cover of the candy. So you get this squish around this level, also here at the 67.20. So those compressed areas represent the max and mean in terms of the potential distribution of prices. Obviously, the price can go to 6,900, but will tend to close back to this area, or vice versa. If it would drop to 6,700, it would tend to go back to 67.20 by the close. And what's interesting about this is generally tilted to the right towards the calls. Today, clearly tilted, to 6,800 and a bit to the left. You can see it's very compressed at 68.90, but not so compressed all the way down to 6,700. So it's like telling you we're leaving the option, we're leaving, some space for the market to go down if it were to go down, but we would cap it immediately beginning at 68.80 if it were to spike there. So this is basically what it tells me, and that's from this perspective. Now, looking at it from a different angle, what I see here, and it's interesting, if this section around, let me increase this. If this section, can I do this actually? Can I do this? Oh, I can do this. Okay, didn't know. Let me change the color. Right. So if this blue line would just continue being negative from 68.05, I would say this is a natural way of things, right? So, they become bullish around 68.05, 68.25, they're net bullish, right? They don't have any more dents going negative. And from here, they're just negative. But it's not the case. Suddenly we see these spikes around 67.80 and 67.90, those levels I mentioned before that I will a bit expand on them. And these are basically bullish positions. Now, bullish position might be somebody monetized some puts, but large enough to, for me to capture it. Or this could be something to do with that skew being tilted to the upside with no real explanation.
Okay,
So
hold on. Late breaking news. We got a headline-ish. Not a big headline, but apparently the market thinks it's important. So at Davos, Lutnick said something, and Legrand, whatever her name is, walked out of the meeting, and then Trump said he won't use force to take Greenland. I don't know if anyone really thought he would. And so we got this little pop, nothing, exciting, but at least we're up, 20-ish points from the close yesterday.
well, it did spike right into 68. It did spike right into 68.25. Yeah.
I just wanted to let people know something happened. You can go on with your analysis.
No, but I mean, we know the 6825 is the level.
Yeah.
So it did spike right into there and got sellers, just showing us that level to be a trigger for the long side if the market can reclaim that. So up to there's no problem. The market can breathe all this nonsense from Davos, but
right, which I have.
If it doesn't really reclaim that level,
right,
it won't do too much. It will just rotate back down.
Right.
Now, the interesting part in my eyes is that I was just talking about this section, the 67.90, 67.80, as being the bullish support level. And this is where we came from. We just bounced from this level, right? From this section, we just bounced basically to here, to 68.25. And this pretty much captures the move before it happened, saying this level will be support. This level will be the final wall before everything becomes more bullish. And this is pretty much what we just saw. And as I explained before, the skew shows a stealth long position that might be somebody just closing his shorts, which is bullish by itself. But, we would rather have someone opening a new position, risking new money, rather than just closing some shorts. So I'm not surprised the market is bouncing from here, but I'm still cautious until it doesn't really reclaim the 68.25 and able
that's
to
where
hold it
we
also.
are right now. If you look at the chart on the screen, I call that the reversal trigger. Same difference if you call it something else, same idea. Now we're right there. We're right at that. What's going to happen? We're right there. If you look at the chart, we're right there. So it's interesting. We're kind of to take an off-use phrase and use it in different contexts. We're right where we're supposed to be. We're right where we're supposed to be, and we're right at the 50-day moving average. We're right at the reversal trigger or that inflection point on your volatility surface. And I'm not sure what VIX is doing. We could take a look in a second. I'm sure vol is coming in a little bit, and we have to get. So, would you say how much over 25 do we have to get to sustain to get the next leg?
If you bring back my screen, I can show it.
Yeah,
so
I put it back up.
This was the next slide just before the news, and this is what I was about to explain, that this is the level that basically can generate the move, and if it does support, we will go 68.25, and if we hold that, right, the last bend into a negative section is here, right? It's this level, but after that, the blue line is only above the zero. So we will go, the first thing we do is tag the 68.60. That would be like your immediate level of path of least resistance until it reaches that level, whatever that is on the market maker position thing. So we can do that. We can push, if we hold the 68.25 into the open, we can push and squeeze a bit to 68.60 easily, but then we need to see what happens. Like, do we get like an immediate reject all the way back down? Does the market starts, do the put holders start panicking and start selling all those access puts? We don't know. We need to wait to see the market actually, first of all, opening above 68.25, then rushing to the 68.60, and only then we can start figuring out if this holds or not. And if it does, this can carry out into tomorrow's Friday's OPEX thing.
Okay, so now looking back at the option depth chart with this in context. So here's the 68.20. Here's like the kind of the call ladder up that we talked about, and that you kind of have just kind of depicted a little differently on your thing. And so here's the 68.25, and then there's kind of a ladder 68.60. That's your next level, and there it is on the chart, about 1,000 contracts. We got a little bit of stally stuff we have to fight through, the 30 and the 50 round number. So, and which is also kind of the top of the expected move is around 40. So I don't know that we get to 60 today. It really depends on what happens with vol. So those are kind of our broad levels, and it looks like it's going to be interesting. It's already 9:20, so we're going to wrap it up in like 2 minutes. Let me see if there's any.
Can you show, before you go, can you show tomorrow's
Sure.
this chart for tomorrow?
You want to see the bar chart, or you want to see the depth view, just the numbers?
No, this one.
This one, okay.
This one.
Let's look at
Curious if how they are positioned for tomorrow.
Okay, specific.
Just to make sure we don't miss an opportunity here.
Yeah, absolutely. Come on. What's going on? All right, it's freezing on me. All right, and we're still flying. We're still flying. So Trump is at Davos, and I guess he said something, and well, will we call it a taco? I don't know. Come on, there we go. Okay, so let me just make sure I have the correct expiry here. That's the 22nd. Okay, so tomorrow the positioning is relatively thin. We have some sold puts all the way down 6,700, 68.70. We have some sold calls between, let's just call it 6,800 and that same 68.60 area. Well, we have some calls at up till 68.65 with a little stall at 68.40. And let's take a peek at Friday while we're doing this, since Friday
So
is
for tomorrow, we can conclude there's nothing special.
Nothing special, right? That's a good way to say it. And then here's Friday. Now Friday looks a little more interesting. 67.85, where we closed, where we are. Bunch of puts sold, 3,000. We got more puts down here at 6,700, sold, not bought. Sorry, folks. And we have kind of congestion in this 68.35 to 68.70 area with the target 68.60, your number again. And then over 67.80, we kind of have a ladder all the way up to 69.40 back to last Friday's close. Sorry, nothing happened. If you looked at your statement from last week to this week, and you saw you'd see, if let's just say we end up at 69.40 on Friday, and you check your statement every week, oh, nothing happened. You say nothing happened this week. Okay.
Yeah. Well, this is interesting with this large. What is this? Like a synthetic contract? What is that? Like
which one?
Yeah, that one. You have the short put here, and you have and what is on the other side?
It looks like a 5-wide put credit spread, I'm thinking.
So somebody sold the puts. Oh, okay, credit spread. Yeah.
Yeah. It looks like a credit spread. Looks like a pretty clean credit spread. Because it's all puts on both sides. I don't see calls on one side, you know what I mean? So it's all one thing.
Okay, so pretty supportive in that sense. They're all long gamma here.
Yeah.
Well, let's see if the market holds.
Okay, let's see. Right. So that's what's going
30.
on.
Yeah. I mean, that sounds bullshit for the market to go up on whatever. On that.
No, the market went down on bullshit, so it went up on bullshit. Bullshit in, bullshit out. Garbage in, garbage out. It's all bullshit.
Okay. Okay, we're ready for all.
Okay, so, but in general, I'd rather see us up 35, 40 points and down 40 points at the open. I don't mind if we go up and then come back down, rather than going back down and trying to, reclaim flat. So that's a good start to the day. Okay, everybody. And if you like this kind of analysis, where's my little propaganda stuff?
What?
Propaganda. Yeah.
Nice.
Like,
by the way,
subscribe.
somebody asked I will go more in depth into those trades I do to scout and get some sensors. We can do this tomorrow.
Oh yeah. Somebody asked about that.
Yeah, we can do that tomorrow. I'll start tomorrow. So instead of the analysis, I'll just go into that and show examples and stuff, and we'll do that tomorrow.
Okay, and so we're still at the reversal trigger or at the inflection point, however you want to think of it. And let's see what happens. May you live in interesting times, folks. Take care. Have a great day.
Bye-bye.